All right, guys, welcome to Tuesday, November 15th, pre-recorded Zoom, making sure the audio works. Cool. Yeah, my bad for last week about that. Let's see. Cool. So starting off with DXY, summarizing what we talked about last week. We were pretty much talking about how the case that was built over the past 2 to 3 weeks, meaning the unsubstantial new high, overall liquidity grab from a major intraday, and even though we had the bullish reaction from the red line, that pretty much was just a reason for us to just see a pullback for the move that we had anticipated for the past couple of weeks. And then I know last week we were anticipating just the immediate continuation, which is kind of what we got. So now we're in a very interesting spot. If you note, right, we've already came into an inefficiency, an inefficiency given here. So this inefficiency, right, if we start to see this from a bit more of a higher time frame, right, we do know that we are still technically bullish, right, from a macro stance. However, you can easily point out, right, a ton of different potential POIs as to how low we could go. This one, not as valid in my opinion as the first one, but this one would be technically ideal just because we're seeing, right, obviously a monthly candle there, but we're seeing potentially structure being tapped. So I would honestly expect to see something like this here, at least meet it here. Now, I don't know if we will actually, bounce off of here to the upside. And the reason for that is just because of how impulsive this candle has been. So because of how impulsive that's been, it's really hard to judge whether or not we're going to see a reversal. However, that's for, obviously weeks to come. But as of right now, right, we know that we are bouncing off of an inefficient. If we zoom in, we know that there is an internal reaction. Right, we know that there is a liquidity grab there. So is this a reason, in my opinion, for the pullback to continue? I wouldn't say so just yet. Just because, right, we're reacting off of obviously another POI, and this could easily still continue lower. Why? Because this is a continuation BOS present here. So I don't see this being just I don't see this being the reason why we start seeing, higher pricing just yet. However, if we are to see that, I'm assuming anywhere in between this wick and this candle would probably be a reasonable area as to why this could start to reverse a bit or start to give us a bit of a deeper pullback. However, this isn't really my ideal bullish scenario per se from an intraday stance or from even a scalp stance. But because we have technically overextended, if you could see last week we made it up until here, right? We already had a small bit of a pullback and we saw a continuation lower. So it's very, in my opinion, that's a bad drawing. That if we see a transition and then we see a melt and then we see the liquidity grab here, this is usually the reason for us to start seeing a bit of higher pricing. So I wouldn't be surprised if that's technically where we see any type of retracement begin, but it's not necessarily the type of a scenario that I would like to trade and like to, continue or give some sort of any type of bullish risk there. However, I am more leaning towards seeing what could happen in the premium if this is the pullback and then have this then meet a previous target, because a proper transition here would literally be pro trend from not only a major minor intraday, but because our swing is technically in the pullback phase, right? And by that I mean the entire range, because that is technically, the beginning of the pullback, that would still be in support of that. We can't really assume otherwise just yet. That brings us to AU. AU, you guys know that we were looking for that POI on the daily, that POI did not meet. However, the H4 wick did meet. However, I'm not like I said, I'm not really too, encouraged, or I'm not really, too keen on wanting to see or wanting to trade a bearish scenario here. But it really doesn't look like we're going to reach that daily POI. It really just looks like we might start giving a bit of a move downwards. Right. However, we must also acknowledge that this is still bearish, I'm sorry. Right, technically from a high, low into retracement, we've already seen, right, the premium pricing. So if we are to see any type of transition here, right, which technically we've already have an internal scout bearish because of the continuation BOS here. However, if we are to see the full transition and see this break, then I would realistically want to see a bearish scenario there, because that would be in alignment with the previous swing. That's pretty much the only reason why I would be bearish there. As of right now, though, we could easily see a bounce and make it to that daily POI, but I guess we'll have to wait and see. EU, this one, I'm much less convinced with any type of bearish scenario. Similar with DXY, how I'm not necessarily wanting to be bullish just because of the continuation BOSs and the reversal BOSs internally that have been shown. So as of right now, this wouldn't be something that I would want to sell downward. This would be more so something that I would like to buy right here. Right, and that could obviously take a couple of days. That could take probably till next week, just because this is the daily. But this is more so something that I want to buy longer term than sell shorter term. And you guys can see how that's a bit conflicting, whereas this still looks bearish, but this looks much more bullish. And that's only because of solidified points and our structural range is present. So I guess we'll have to wait and see, just to see which one gives us the play, because for all we know, we could have a daily or the daily POI be met, we have the retracement be met, and then once this starts to reach here, then this would reach technically around here and it would go higher, which I'm also not completely against here, just because of previous POI that we have reacted from, the solidified low. So it could be high, low retracement, unwillingness, reversal, right? That would be a scenario that I wouldn't be too, I wouldn't be too against. So gold is in, right, a weekly point of interest. This weekly point of interest is showing us an internal reaction. As you can see, we've broken the continuation BOS. We have the confirmed liquidity grab. So this could start, giving us some sort of a retracement. However, this one, just like with EU, this is something I'd rather buy in turbulence point 1, turbulence point 2, but more preferably turbulence point 1, and just have that be the immediate continuation. That's more so what I would really like to see here. Deleting that was order flow disruption. This one never worked. So we are here right now, and I really do want to see if we can start coming down right into the turbulence point and then giving us that rocket into the upside, because this, in my opinion, is bullish, mainly from the case that we built back in September, I believe, where we had pointed out the weekly POI here. Right, the weekly POI here. So even though the internal gave us a bit of choppiness, we do know that the bias that we had presented was based on the weekly candle of interest. So I'm basically just going to be continuing that bias with this turbulence point that we have just covered. So that, in my opinion, could be the catalyst to bring us back into at least 1900s, right? And best case scenario, we take out liquidity from before. But yeah, 1 second. Sorry, I was getting a call. But yeah, with US 30, like we said last week, we have reached the POI of interest. However, we have not met, the bullish invalidation, right? The POI here has been continued and that has reached its target. So now if that leads to us then taking out even this here, right? This could be a sign of a reversal, right? Because we have taken out liquidity, and now if we were to abruptly take out the the immediate low here, basically minor intraday low, then this will be a confirmed liquidity grab, and this could potentially give us a sign of reversal. So that would pretty much be what I'd be looking for here. Only when the liquidity grab is confirmed, then we can look for scenarios. But yeah, outside of that, US 30 in a very interesting point of interest. Dollar looks like it could start retracing. AU looks like it could start retracing as well. EU, this one as well with the bearish retracement into bullish move continuation, but this one isn't really something that I'm liking in terms of price action as to why this could continue lower, at least for the short term. And then gold, that we are still bullish, and we're just looking for the retracement into the POI to give us then a move to the downside. I mean, to the upside, I'm sorry. But yeah, with that being said, I will see you guys on Friday.